The International Monetary Fund has warned the world economy is weakening. The IMF is forecasting global growth of 3.5% this year, down from 3.7% in 2018. It's also warning of increased uncertainty in the outlook for growth, expressing concern over China's performance. While a global recession is seen as unlikely in the short term, the IMF Director Christine Lagarde has warned policymakers to be prepared for a downturn.
The world economy is growing more slowly than expected, and risks are rising. Address remaining vulnerabilities and be ready if a serious slowdown were to materialise.
Christine Lagarde there. For more on this, I'm joined now by business editor Ian Verinder. Ian, g'day. So first of all, give us the overall picture in terms of global growth.
You know, a year ago, if we were sitting here having this conversation, we'd be talking about pretty much a coordinated growth pattern across the United States, Europe and Asia. And now that has changed quite dramatically. You've got the American economy, most people seem to think it has been given too much of a sugar hit, and that is now coming, the growth won't be sustained there. You've got China with some fairly serious economic problems emerging, and which we saw yesterday with reduced growth figures there. And of course you've got the disruption in Europe with the UK possibly having a messy exit from the European Union, and all these things are weighing together to downgrade global economic growth forecasts.
So how significant impact on growth or trade battle at the moment, how significant a factor is that on growth?
Look, it's an extremely significant factor, but it's not the underlying cause of what is going wrong here. You know, what it's done, I guess, is to expose the fragility of the growth that we've had in the past few years, particularly given that a lot of the economic growth that we've seen post the financial crisis has been driven by massive stimulus programs from the US government in particular, and also China, and to a similar extent Europe as well. And as those stimulus packages are withdrawn, you now see that the economic growth starting to slow, and the trade war imposed on the top of that is really starting to have a massive impact as well.
So is this the slowing we had to have as a result of that stimulus being withdrawn after economies improved after the global financial crisis?
You know, we live in a world where we're geared towards growth, population growth, more spending, higher wages, everything is geared towards growth. And if you have an artificial stimulus in there providing the engine for that growth, and then suddenly you decide, well, look, this is all becoming too expensive, it's getting a bit dangerous, we have to withdraw that, and then you start to see the growth go or slip and even go into reverse, that's when we have real problems, and it becomes incredibly difficult to withdraw those stimulus packages. You know, we're not geared towards slowdowns and towards contraction particularly. I mean, you get social problems, you get unemployment, it becomes very costly as well. And so once it's almost as though you become addicted to the stimulus to maintain the growth, and that's the danger of where we are at the moment.
Yeah. And so how are economies managing that transition then now from that stimulus injection to a more level playing field?
Not very well. I mean, you know, you've seen Donald Trump, the US president's outbursts against the US central bank for raising interest rates and for trying to claw back some of that stimulus. You know, he can clearly see that if that happens, you're going to get a downturn on stock markets, and particularly Wall Street. He's staked his whole presidency around the fact that he's boosting the stock market. They're not handling it particularly well at all.
So do you think the Fed is acting too quickly?
I think they started too slowly. They should have started a lot earlier and probably done it in over a longer time period, rather than they've left it too late, and now they've seen that, you know, inflation could get out of control if we don't act now. They've now decided to basically put a stop on withdrawing the stimulus, or at least on interest rate rises. They're still withdrawing the stimulus packages out of the US economy, which is reverberating through the global economy as well.
Now tell us about these concerns with debt in China.
Well, you know, after the financial crisis, the entire capitalist world was on the brink of collapse, the capitalist system. And, you know, it was quite ironic that China, a communist country, rode to the rescue and essentially saved Western capitalism from itself. But it did that through a series, again, of massive stimulus programs. It built huge amounts of infrastructure, much of which now appears to have been rather, worthless, directed in the wrong areas. We benefited incredibly from that because it was all predicated on investment in bridges, in roads, in buildings, and we provided the raw materials for that, iron ore and coal in particular. And so we benefited materially. The problem I guess Australia has is that we are overly reliant on China as a trading partner and on two commodities. Steel, iron ore and coal, and that is going to really impact us if China really does slow down.
But isn't there a perverse situation there? Is if China slows down, they inject more stimulus to try to get it going, and Australia benefits from that. Yeah,
it's interesting. The Chinese stock market yesterday went on a bit of a boost because they saw, with the poor economic growth figures that were released yesterday, this means that the Chinese government will have to not just maintain stimulus, but pump more in, and so the stock market there went up. I mean, it's a perverse world, really, when you've got this situation where everybody is quite addicted to the stimulus packages, and that's what's driving everything at the moment.
And so, what's a general outlook for markets, equity markets, through this year?
Look, we've seen. It's hard to know the quantum of where it's going to end at the end of the year, but I think you're going to find that this year will be much more volatile than we've seen in previous years. We've towards the end of last year, I think a lot of investors saw that the stock markets are just way too high. They're incredibly overvalued. And if you think about asset markets, not just stock markets, bond markets are overvalued. Property markets globally are overvalued. The property boom we've seen in Australia, which sort of came to an end last year, it's not just an Australian phenomenon, it's across the Western world. And so all these asset prices have been driven up by ultra low interest rates and money being pumped in. When you start to withdraw that, you obviously have to see some kind of pullback.
And superannuation results at the end of the financial year could well be negative?
If not, some funds certainly will probably be negative. Even the best performing funds, they will be well down on their previous performances, I'd say.
And we've got an address by the Treasurer Josh Frydenberg coming up in the next hour or so that we're going to carry live here on the ABC News channel. What are economists hoping for from the political parties? We've got election year as well. What are economists hoping for from political parties in terms of managing what's going on?
Yeah, I mean, because we've got an election year, it's very difficult to kind of get a coherent read on what this is all about. The government clearly will try and has been trying to portray this situation with economic slowdown across the globe as, this is not the time to change horses. You should stick with the people who can manage the economy, and you're going to have the opposition saying exactly the opposite. The economy hasn't been managed particularly well, and if we are going into a slowdown, we shouldn't be giving out tax cuts. We should be concentrating on paying down our deficit and our debt as much as possible, and to ensure that we've got enough ammunition, as it were, in the case of another slowdown.
Which Christine Lagarde seemed to be indicating very clearly there overnight. OK, we'll leave it there, Ian Verrinder.
Thanks, Joe.
And just so once again, the Treasurer Josh Frydenberg due to deliver an address to the Sydney Institute in about an hour's time, and we'll bring you that live here on the ABC News channel. A total fire ban is in